Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio, and this is another episode of the Mortgage Guy Podcast. This is the one where you're going to get to know a little bit about credit and what goes into it, what borrowers can expect, maybe some takeaways for real estate agents to advise their clients too if they're talking to them about credit before we talk to them about credit. With me today, I have Ginny Delaney with Xactus, a.k.a. Credit Plus is who it used to be. That's how I still call it. Ginny, thank you for coming on the show because it wasn't easy. I appreciate you coming all this way.
Oh, no problem.
She flew all the way from Arizona.
Yes, but
right?
I'm enjoying the clouds and the overcast and the rain.
Yeah, it's beautiful.
I welcome it.
It's like living in England right now. The weather sucks.
Yeah.
But no, her kids are in Columbus, so she was able to stop by in Columbus and then travel my way just to do the show with us and educate our buyers. So, Jenny, before I jump into this, a little background on what you do at Credit Plus. What's your position, title, things like that.
Right. So I have been in the credit industry for 20 years selling credit reports. So I've my title is sales rep, account executive. And like I said, I've been doing it for 20 years and it's all credit. So there's so many different stories and so many different things that come up throughout, all these years and credit changes all the time.
Right. Yeah, I was going to say, since you started, it's been 20 years. Have you seen a massive evolution of how reports are made and, services that are add-ons and all that? Has it completely changed?
Well, a lot has changed, like as far as like the pricing has changed. Yeah. But typically the actual FICO scoring model is always the same.
Yeah.
And you can't really, it's so hard to judge how it increases the score, what you do to increase it, what
it is.
Lowers your score,
Yeah, it is a challenge, and we try to advise our clients the best way we can. But there's a lot of cool tools out there that we use also through your website to help us kind of narrow down on what they need to do. So,
exactly.
Topic number 1. So this is a big thing for borrowers. If you're watching this, so this is going to be our borrower education series and realtor education series. The first thing is called trigger leads. So I'll tell you what. Instead of me explaining it, Jenny, what the hell is a trigger lead?
So a trigger lead is when anyone pulls a credit report. Equifax, TransUnion, Experian, the bureaus, they turn around and they sell that data to different credit vendors, all different types of credit institutions.
Yep, mortgage
companies, auto companies, anything that has to do with credit. And they want leads. They want to call these people because they can see that they're buying a car. They can see that you're buying an inquiry shows they're buying a house.
Right.
So to prevent these trigger leads, is what you do is you can go to optoutprescreen.com and that prevents you from receiving any type of solicitations in the mail via either by mail, phone calls, things like that.
Yep. Emails, everything. So the credit bureaus have all your information. So, what she's talking about in trigger leads is as soon as I pull your credit, when I do a hard inquiry, you are going to get blasted for the next week, 2 weeks, phone calls, text messages, other lenders, online people, teaser rates, a lot of goofy stuff. Sometimes they say, oh, yeah, we're affiliated with Western Ohio. They're not. They're doing anything they can to keep you on the phone, to try to sell you or remove the client from us to get them themselves. And a lot of people get frustrated with it. So a lot of times I warn people, hey, I'm going to pull your credit.
Right.
You're going to get some phone calls.
That's right. And it has nothing to do with you,
Nope.
Western Ohio Mortgage. It doesn't have anything to do with the credit vendor that they're using.
Yep. Can't do anything about it.
You can't do anything about it.
Yeah.
No, because they're automatically selling it and it's sold within, as soon as a hard pull is pulled on the credit report,
Gone.
5 seconds, it's gone. It's sold and they pay high dollars for the quicker they sell it. Give them the information, the higher dollar it's going to, the bureaus are going to charge that creditor.
I don't know how much you know about trigger leads, though. What kind of information and data is there? Because I know, when we pull credit, there's a specific code for it's a mortgage inquiry. I mean, do they alert other lenders like, hey, we got a 740 credit score? Like, do they bucket them? Do you know? I don't know.
They can bucket it, and
they can charge more because they're like, hey, I got a 760 to 800 credit score borrower looking for a mortgage. So it's in
this
more
zip code area,
crazy,
whatever the zip code is and whatever the score is, they can turn around and sell it.
And guys, I try to hide your phone number. I thought that was always the trick when it first started happening, the 555-5555. So I put that on the application. It doesn't matter. The bureaus already have your phone number.
Right. So whenever you go to buy something and you fill out a credit application at a furniture store, wherever, you're putting your name, your address, and your phone number.
Yep.
And that's how they're getting it.
Yep. Yeah. And So just be aware of that, guys. It's annoying. Can't stop it. Like she mentioned, pre-screen. Oh, I'm sorry. Pre-screen opt-out.
Go to optoutprescreen.com.
There we go. Optoutprescreen.com. And what that does is you can permanently opt out of any kind of credit offer.
For 5 years.
Okay, it's 5 years.
Yes. So what you do is go to that opt-out pre-screen.
Yep.
Opt out for 5 years.
I think they ask for a social, right? Name. I swear they asked for a social. I thought when I saw it.
I don't recall because I haven't done it in a while.
Right.
Yeah. But they used to say it increases your score, but it does not.
Yeah.
So that was kind of like a myth, but sometimes it happens.
Yeah.
They say it doesn't really affect the score. But you could also permanently, forever, like opt out and never, like not even for 5 years, just forever. But you have to fill out a form and then it costs money.
That's what it was. Okay. I thought there was an option to do it. But yeah, guys, go out there, do that. If you're entertaining buying a car, you're buying a house, it makes sense because I think a lot of people have experienced even especially in auto loans, right? You go to the dealer and they pull your credit and they don't tell you they sent it through 25 different places and they have all these inquiries. And sometimes the amount of those inquiries can have an impact on your credit score, which we're going to get into a little bit, right?
Right.
So let's move on to topic numero dos. How do I increase my credit score? So a lot of people are out there. They're like, I'm just, I've been working on my credit for years. I don't know what the hell I'm doing. I don't know how to do it.
Right.
What are some tricks and common sense things? I know what I advise buyers, but I want to hear it, what you have to say as well.
Sure. So number one is pay your bills on time.
Right.
Honestly.
Yep. No 30-day lates, guys.
No 30-day lates. If you just pay your bills. So number one, you have to have credit.
Right.
And just pay them on time every month. Like have it set up automatic payments through your checking account, whatever, even a minimum payment. Even like some of your accounts, you could set up minimum payments. Just set that up in case you forget. So depending how you are with, your accounting, just make sure you make your payments on time. So to increase your score is if your limit on a credit card, say, is $1,000.
Yep.
You want to keep that balance under 300.
Boom. I advise my clients correctly. I always tell people 25 to 30% credit utilization ratios is the sweet spot because it's showing that you're using credit. You're not abusing it and living off of it. You're repaying it. You're responsible with it.
Right.
Not keeping it at zero balance where it hurts the credit utilization ratio. You go higher than that 30%, and then slowly but surely it starts dinging and chipping away at your score. We see a lot of people that come in with maxed out credit cards. You're not over the limit. You may not even had a late payment on it ever.
Right.
But your score is going to get dinged up because of something called, I don't know if that's the reason, but trended data. They're like, okay, we've got 4 credit cards that are reaching their max. What's next? Bankruptcy? What's going to happen next? So they start dinging you a little bit. That way you're not going out there and opening up more credit cards and living off that.
Exactly.
But it has quite an impact.
You're pretty smart. You're pretty good.
I try.
You've been doing this for a while.
Plus, we use Credit Wizard all the time and all that fun stuff to play with it. When people have some damaged credit scores, we go out there and we say, all right, well, what if? And it's got a ton of great tools on the website.
Right. And also, like with the What If Simulator, like you have to do exactly what it says.
Yeah.
So a lot of times it's not good to pay off a credit card.
Correct.
To zero balance. So you want to leave like a little bit of a balance, even like $10 or $100. If your limit's like $5,000, leave like $100 balance. When you know that you're going to be pulling credit, you're going to be buying a house or you're going to be buying a car. You want to leave a little bit on there, because one time I had it, somebody paid it to zero and the loan officer said, leave like $10 and they pulled the credit report. They didn't get the score they needed.
Yeah.
So they had to go out and
it's got to be exact.
Gas. They had to go get gas, put gas in their car. And then have the credit company give them a letter saying their new balance now after putting gas in is $10, and then they rescored it.
And guys, this is not free, okay? When you rescoring credit, it is quite expensive, so prepare yourself. So listen to your loan officer, your lender, your real estate agent if they're advising you on credit, and do those things because, like she said, if we have some bruised up credit and we're trying to bump up the score, we use these what if simulators and we can play with it, right? We can change the balances on your credit cards and see what reflects immediately. What about in 2 months, 3 months, what it's going to look like. But you got to follow it to a T. We can print it out with the instructions, how much money you're going to need out of pocket, each credit card, debt. It's amazing.
It is. And so you also just want to, what we were talking about earlier, you want to be either under 30% or under 50% or 70%.
Those are the benchmarks.
Yeah.
Okay.
Yes. Yeah. So, and if it's over the limit, it's going to kill your score.
Yeah. Oh, yeah. Yeah.
Like by 40 points, like
That's
a lot
crazy.
of points.
That's crazy. So on that topic, let's talk about what it takes to get a mortgage credit score.
Right.
Right. What are good ways to create credit for someone that doesn't have it? Because for education purposes, guys, there are a ton of different algorithms used to calculate your credit score. If you're going for consumer finance, it's different. If you're going for mortgage finance, it's different. It's all different. Okay. So on that topic, what does it take to get a mortgage credit score?
You need to have a credit card that has been in place and you're using it, using the credit card, and for 6 months.
Okay.
That'll get you a score.
That'll get you a score.
Right. And then if you need something else, a lot of times you can't get a credit card because you don't have credit. So then what do you do?
Secured credit
So
card.
then you go to a bank or somewhere and you get a secured line of credit for like $300, whatever the minimum, whatever, money you have.
Yep.
And then use it right away. Go use it for gas, use it for groceries, and pay it off. Use it, pay it off. Use it because you have to have a trended data showing that you're using it and you're paying it off. And that's what's going to build it up. If you don't, I would also recommend to go out and get an authorized user account. So go to a family member, your parents, and see if you can get added on their credit card as an authorized user. But make sure that they're at 30% utilization on that credit card. They're not over the limit, and they don't have 30 days late on that credit card.
Yes, guys. So let's talk about that. So an authorized user account, just like she said, if you have a family member that has great credit history on that card, because once you get added, all the history that's ever happened on that card gets added to your credit report. So if there were late payments a year ago or it happened last month, it's going to actually negatively impact you, even though you're being added. So make sure the card is clean, the balances are good. That can create a credit score for you. Now, again, just because we're creating a credit score doesn't mean you automatically qualify for a mortgage. So make sure you are talking to your lender about what's needed in order to do such. But this is how we're going to start creating credit. And the other thing I want to touch on was secured credit cards. So this is a great way to start building credit, right? 18-year-olds that maybe not have a family member that they need to be added to an authorized user.
Right.
Secured credit card, you're going to go to your bank. Not all offer, just for the record, but most do. You're going to deposit $300 or a $500 deposit, depending on what you get approved for. And basically, they're issuing you a credit card against your deposit, okay? Meaning it's a safe bet for the bank to issue this to you. If you fail to make payment, they're going to close your account. And they say, all right, I've got your money to make this payment. That's how it works, okay? Same concept as, when you get an auto loan. It's secured by the collateral, the auto loan. In this case, this credit card is secured by the cash that you gave, right? It's not unsecured. On this, let's talk about, so since we're trying to build credit, it depends on the credit card too, right? So
it does.
Because it's regional based, right? Depending on your creditor.
Exactly.
So, and what I mean
you
by
want to make sure that they're reporting to all three bureaus.
Exactly.
And even if you open up that secured line of credit, you ask the bank, are you reporting to all three bureaus?
Yes.
So this is what I did with my kids. This is just like a little story.
I'm going to blast this right in front of you.
Yeah.
There you go.
Okay.
I just want to make sure I keep hearing you.
Sure. Okay. So what I did with my children, because I didn't want to be a co-signer for their apartments once they get older.
Sure.
I want them to be responsible. So I didn't have to worry about it. So what I did is I did the secured line. Well, I added them on as authorized users on my credit card.
Safe bet for you.
Yes, safe bet. And then I also gave them a checking account and savings account, had that all in place. Then went to Macy's you can go to Kohl's, anywhere, and open up a credit card with both of our names on it. And then I would use it.
Yeah, there you go.
But their name's on it.
Their name's on it, but you just don't give them a damn card.
Right. So their name's on it. Yeah, I hang on to the card, and I go and I charge all the time on it.
Yeah.
And I built it up. So and then my daughter goes to open up a credit card by herself, and she got it. She got approved like that.
And she doesn't have to get a secured card. She can get an unsecured debt with a Discover card, Capital One, whatever it is, right?
Exactly.
And what we were talking about regional and asking if it's going to report to all three bureaus is, depending on who your creditor is, there's a lot of localized creditors, right? Like an example around here is Mid-Ohio ACC. It's an auto loan company, right? That issues auto loans, but they're regional based. I think they only report to TransUnion.
That's right.
So you will see this massive, you're like, hey, I have a credit, or I've had an auto loan for 18 months. I don't understand why I don't have 3 scores. I only have 1. Well, it's because it only reported to 1. So that sometimes this is also why we see such a wide range of credit scores, right? Because these people have such a credit mix. I've seen 600 all the way up to 750 on the same report for someone, because they might have had a medical collection they hit and only hit one bureau or something weird.
Exactly.
Right?
You have to
It's
really
crazy.
look down into who's reporting
Yeah.
what as to how it's affecting each of the bureaus.
Guys, you don't want to be in this business. I'm just telling you right now. It is so confusing. So that's how we're going to start creating mortgage credit, so we can get a credit score reporting for you, so we can move you forward into pre-approval. So let's talk about FICO. Okay. So I have a list here we're going to kind of go through. So how FICO scores are broken down, right? So we always wonder, and then you might have to re-log into your computer there so you have some notes. So Jenny's got some notes for us on this, and I always mix up and mess up a little bit on what percentage of what is creating the score. Like we talk about most recent histories, how long you've had it, types of debts, all this repayment histories. There's a percentage of mix, right, that creates that score. So Jenny's going to pop that up for us, and we're going to dive into this so you understand why your score may not be as strong or might be whatever the case is. So let's take, and then Justin, who edits our videos, I think we're going to have Justin pop this up on our screen. So Jenny, if you could email that to me.
Sure, no problem.
Today, that'd be fantastic.
Yes.
So let's talk about this. What do we got?
So it's best to have a lot of different types of credit on your credit card.
Mm-hmm.
So payment history makes up 35% of your credit score.
So obviously, like she said, no 30-day late payments, guys.
Yeah. So payment history is huge. Exactly. No 30-day late. And then amounts owed makes up 30% of your credit score. So you want to make sure that your balances are low.
That's that credit utilization ratio.
Exactly. And then the length of the credit history is 15% of the score. So don't close out any credit cards.
Yep.
So if you have an old credit card, just let it sit there. If you don't want to use it anymore, you can, don't close it out. You can cut it up, but don't close it because that's history. And you don't want to throw that away. New credit makes up 10% of your credit score, and types of credit in use. Types of credit in use is like your auto, your mortgage, and different credit cards that you have.
Installment versus revolving, right?
Exactly. Yep. And your student loans are on there as well.
Yes, they are. So installment loans, guys, things like auto loans, right? Something that has a regular monthly payment every month until it amortizes itself to a zero balance. Revolving credit are things like credit cards and home equity lines of credit, where the balance is going to move constantly, right? As you use it and you pay it down. That's sometimes the heaviest weight. So when we're trying to improve credit scores, paying off an installment loan rarely to never has an impact on the score in a positive manner because it's a regular monthly payment.
That's right.
Playing with the credit cards, the revolving credit, that impacts the score a ton when we're trying to improve it. So we're saying push down these balances and we'll get this score up.
Exactly.
So credit cards are very, very important. And I know a lot of people out there like, I don't like credit cards. I don't use them. Unfortunately, it is a necessary evil, guys.
Yes. If you want credit, if you want a phone, a cell phone, a car, anything, you have to have credit. Do not use your debit card. So number one, I have family members, people that use their debit card, and I have no idea why.
Get the points on the credit card and then use it as cash.
Exactly.
Right? I use my credit card for everything.
Everything.
And I immediately
Even
make a payment.
Everything.
And I'm not saying abuse your credit history, but just use it as cash as you would a debit card. Right? If you're going out to a restaurant, you got a $100 bill, use the credit card, go home or the next day, make the payment as if you were going to be spending cash anyways. Guys, it's going to keep moving your credit forward.
Exactly. Right? Yeah. Make your money work for you. Get some points.
Absolutely.
Right.
Absolutely.
And help your credit score.
Real fast on credit, also on the types of credit loans. This isn't even associated with credit scores or anything like that. But student loans, guys, anybody that's been in deferment since COVID started, I think it kicks back in September.
They keep pushing it out. So
I don't remember.
The
last update I had was like September, October of this year, or November, something weird. So heads up, guys, if you're not paying attention, your student loans are going to go back into repayment unless you are on an income-based repayment plan, or an IBR is what it's called, that shows that you don't owe any money. So be aware of that. Some people will get something in the mail, they just think it's garbage. It's like, nope, I'm in deferment. Deferment's ending soon. All right. So unless you're in school and you've reapplied for a deferment, it's coming back. All right. So be ready for that. Don't let that get behind and you get a notice that you're 90 days past due. Now your credit score just got hit by 100 points. So just a note. I wanted to add on that.
Right.
So let's talk about something we mentioned earlier, inquiries. All right. So we were talking about you go out and you're shopping for a car or a truck or whatever you're buying, and you're like, yeah, you guys can just shop a lender for me, just give me the best rate you can, and you find out your credit got pulled 20 times at the dealership.
Right.
What kind of impact, if any, does this have?
If it's within a 15 to 30 day period and it's the same industry, because they allow you for shopping, it will not affect the score. So 15 to 30 days, same industry, it should not affect the score.
Yeah, we say, I always tell people, if you're shopping mortgage lenders and they come to me and you just had your credit pulled by 2 other companies, you're like, oh, I don't want my credit pulled again. It doesn't have any impact as long as I use the 3-week rule is what I use.
Okay.
So if it's within 3 weeks of your initial credit pull, we're good, right?
Yeah, usually it's like the 31 days. I would just say wait till after 31 days.
Right, okay. Yep. So on that, though, is there an impact on your credit score when it gets pulled?
Yes. And the lower your score is, the harder the hit.
Isn't that crazy?
So if you have a 600 credit score and you have an inquiry, they're going to hit you harder, like let's say maybe 15 points.
That's crazy.
Dropping it.
Isn't that stupid?
Yeah. I mean, I'm just pulling a number out, but yes.
Sure, but that's dumb. So not only right now are you trying to rebuild your credit and you have weak credit and you're trying to get it up and you're trying to apply for credit to make it better.
Right.
They hit you worse than if someone had a 740 credit
exactly.
score.
Yeah. If you have a 740, you might get dinged 1 point.
That's ridiculous.
Or 2.
See,
right.
this is why it's just nuts.
I know.
Guys, that when you go into these algorithms, you're looking at it. So a lot of people that use the Experian app or the website, you will see all these tabs, FICO 8, FICO this, right? Those are the different algorithms used to calculate your credit score.
Right. So if you pull a credit report today to go buy a car, your score could be a 650. If you go to buy a house, that score is going to be maybe a 600.
Yeah.
If you go to pull a credit card, it's going to be higher than the auto. It'll be like a 660. And then if you go to myfico.com or you go to annualcreditreport.com, because you could always get a free copy of your credit report twice a year. But if you want to score, you have to pay for it.
Yeah.
That score is going to even be higher than Credit Karma,
But Jenny, Credit Karma says I have a 720. I get that one a lot.
When I pulled your mortgage credit report, now it's like a 650 or something.
Exactly, guys. So this is wise because there's so many different algorithms in each industry calculating your score, so you're going to get a different result depending on where you're going to look for it.
Exactly.
And it doesn't matter how hard the industry fights to try to go to one scoring model, which is being considered, but it's never going to happen. Yeah. I don't think it's never going to happen.
No,
personally.
maybe a couple of years.
I don't know. Don't know. But so that covers inquiries. So it's okay to shop around a little bit, guys. Remember, just keep in mind if you're buying an auto loan and you're shopping, keep it within a short period of time. That 3-week window, no more than 30 days. Same thing with a mortgage. You go and you're just shopping around rates. Remember, as long as people are pulling within less than that 30 days, I use a 3-week rule to be safe. It's going to show exactly the same score. So don't think you're going to go to XYZ Mortgage and they pull a 600 and you're like, I'm going to go over to Adam. I'll have a 620 for sure. It's not going to happen. We're going to show the exact same report, guys, when it's pulled in that time frame.
That's right, because, I mean, it might be too much information, but Fannie Mae only accepts certain scoring models for the mortgage industry. So if you pull a credit report with mortgage ABC and mortgage company XYZ, it's going to be the same score. Identical. Yep.
All right.
And medical collections, I didn't know if you wanted to touch on that.
Let's go ahead and do it, because I think we can lump that into the judgment and liens, and if they affect your score, and the answer is no, they do not.
Right, because the liens and judgments recently came off the credit report, so it's on a separate type of report, but not the credit report. So liens and judgments do not affect the score.
Right. So it doesn't affect your credit score, guys, but liens and judgments, if you have one, have to be paid or have to have a payment arrangement set up in order for you to qualify for a mortgage loan. 2 separate items, okay? So that is something that we usually discover in your fraud report and processing. Sometimes tax liens come flying in. We had no idea from 5 years ago you still owe $20,000 to the IRS. We're going to have a payment arrangement set up that's satisfactory with the IRS. Or same thing with, 6 years ago you had a repossession on a car and they never charged it off or written it off as a loss, and they have a judgment against you. It has to be paid, or a payment arrangement is set up and it's satisfactory. So we do have to address those items. So on this topic, you got something?
Yeah. So what if they pay it during the loan process? Do they have to have a receipt? Does the underwriter need
Good question.
that?
Yes, we're going to want to document it. Absolutely. So you get receipts from the creditor. Sometimes that's not enough, right? A lot of times we like to say we're common sense, but sometimes it just depends. So a receipt's typically enough, but a lot of times what we're going to do is we're going to take that information, we're going to send it over to Ginny's company, Xactus, and they're going to do something called a credit supplement on it. And what they're doing is they're contacting the creditor and you, the buyer, to confirm the data is accurate. And when everybody's in agreement, they update it and they put it on a credit supplement for us, validating it's from a third party, right? We didn't do it because we're interested in them closing. That it is now zero balance or satisfied.
Exactly.
So we do a lot of credit supplements.
Yeah.
A lot.
So if your borrowers get phone calls from Xactus, that's the reason why.
Yep. That's right. So pick up the 800 number. We usually try to give you a heads up. So we talked about judgment liens, and it doesn't affect your score, but let's talk medical. Let's talk about medical data.
So medical collections, if the balance is zero, it's paid off, it does not affect your score. It's not even calculated into the score at all. If there's a medical collections with a zero balance, if the balance is under 500, that's also not considered into the credit score. It's anything with medical collections over $500.
Okay.
Then it'll affect the score.
Right. Well, what was the rule that came out? What was it? A year ago, 2 years ago? About they can't report them at all.
Yes. So if it's a zero balance, it will not be reported at all.
Right.
It takes it off the report
completely.
Very
nice. So guys, it's not a bad idea like diving into the Experian website or other credit websites that you can use, CreditWise, whatever it is, right? See if you have anything like that that's outstanding, and if you want to eliminate them,
right,
do it.
I would always go to annualcreditreport.com.
There you go.
Get a copy of your free credit report. You should always do this once a year. You want to know what's happening out there because sometimes there might be a confused file. Like if you have a junior and a senior, that information is going to go sometimes on the junior's file, but it's your father's credit. So you want to look at your annualcreditreport.com and see what's on there and fix it, straighten it up. If there's a 30-day late on there and you weren't 30 days late, call and get it removed. Get aggressive, ask for the manager, ask for the supervisor, and get that off of there. Just make sure your credit report is clean.
All right. We covered a lot.
Yeah, we did. Huh?
We got a lot. About 20 minutes, 25 minutes worth. So, Ginny, is there anything else you think we should cover, we have to cover for borrower education?
No, I would just say, like I said before, pay your bills on time. And when you do use your credit card, pay it off every month if you can. Pay it to a zero balance. If not, at least make sure your balance is under 30% of the limit before you go to purchase a home or a car or anything. There you go.
Maximize the scores. Yes. Remember, guys, and when you have late payments that hit your credit report, there's no magic wand to fix it. You can pay it down all you want, but the late payment, the 30-day late payment is baked into your score. Time, you correct me if I'm wrong, but time is pretty much the only thing that heals that late payment. Right?
That's right. Yes, after time, it does heal it.
Yep.
So if you have like a credit report that has a reported date of recent, and it's a collection, it's going to hurt your score.
Right.
But after time, after 6 months, 7 months, 8 months, a year, that score, it'll start coming back up again.
Yeah.
Yes.
Very good. Before we let Ginny go, and I don't know if she gave us any thought, do you have any crazy real estate related stories or industry related? No, I don't believe you at all. I'll bet you have, but you just don't remember them.
I just know
because they're all alcohol related, aren't they, Ginny? Right?
Yeah, exactly.
Yeah, that's okay.
No.
That's all right. We drink a lot in this industry because we have to deal with you all. So
Exactly.
Yep. Very good. Well, Ginny, thank you again for coming on. A lot of great information for our real estate partners, a lot of great information for our buyers. So, guys, check out the video. It's going to be our buyer education series. You can always check it out on YouTube. So, on that topic, again, thanks to Ginny. And subscribe on YouTube. Check us out on Spotify and Apple Podcasts. And we will see you guys next week.